from Hudson Valley Bookkeeping, and this is part 5 in our series of setting up a new QuickBooks Online file for landlords in the year 2024. All right, let's get started. Okay, part 5. We're going to talk about putting a property on and talking about how to post a loan the correct way. So what I did is I just went on Bankrate and I just did a supposed 500,000, 15 years, because if you're doing anything commercial, you're usually going to get a 15-year. All right, and I just made that interest rate up. Okay, so look at what it is, right? So you have the same amount of your payment every month. In the beginning, very little money actually pays down the loan. Most of it's going to go to interest. Okay. So what is the purpose of this? I see everybody do this, in my mind, the wrong way, because they try and split the payment. So they try and take this amount and break it out in these two amounts, and then they or their bookkeeper pull from the wrong line one time, and then it's a mess and it takes hours to fix it. So first we're going to pretend buy the property. We're going to say it's 100% financing, so it's a super simple entry, and then I will teach you the loan. Okay. So the first thing you need to do is set up your chart of accounts. So always get your chart of accounts set up. I'd rather you not do these things on the fly. So we're going to need a mortgage. And you're going to need a building. So you already have one building. So I'm going to have to make this a new one. Use my office address. Oops. Okay. Okay. So now we've got a building, we've got a loan. We're going to say we're not doing a closing date statement in this video, and we're not getting into that kind of crazy. So one of the easiest ways that I'd like you to get used to posting things is not trying to do journal entries, because some of the best CPAs I know go the wrong, we call it going the wrong way, where you credit instead of debit, and so forth. So the same way you could make a journal entry is by finding, like for instance, your asset here. And look, it says add a journal entry, but you don't have to remember like debit, credit. So let's say today we bought the building, purchase of 50 Railroad, 100% financing. Now we know that doesn't happen anymore. And so you have a building and you want to increase the value, right? And since you bought the whole thing with a loan, you also would have nothing happening at your bank account, right? You got a loan. So now we'll do the Chase mortgage. Click save. So see, in some of my other videos, I should have done that. Is like I delineate the mortgage to the property. The other thing I like to do is put the dollar amount. So this one is $4,355.54. So I do this a lot. If you have multiple loans, which you all do this, because you find some bank that'll happily give you money. So all of a sudden you have like 10 loans at the same bank and they're all really similar. So then it's really hard to break it out. So then I put the dollar amount. It makes it so much easier. Right, so we know this is my amount, okay? So now if we run a balance sheet, and remember this is a demo file. So this one, oh, I think I did this for someone that took a lesson from me. That's why that's on there. Okay, so I have a $500,000 building and I've got a $500,000 loan. So now we're going to pay the loan every month starting in February. I'm going to show you what you all want to do, or a bookkeeper not so great will do, and it's okay until it goes wrong, and then you have a problem. So let's say our first payment's 2/1/24. Chase Mortgage. So this is your payment one. Now here is another thing. I'm not going to do this right now. So what we're going to do, guys, really, really important, is you're going to pay the entire amount straight to the loan. And look how easy it's to find it, because, and if you were adding these through the bank feed, you know, your amount matches. So you could have one that's 43.55, you could have another that's 45 something. So I'm going to pause this while I post all of these. Okay, so I have gone ahead so you can see the whole concept of this. I have posted in the check register each month. And notice the entire amount of the payment is going to the loan. But like, we know that's not true, right? And I posted out through December. So at the end of December, my balance should be 481,381. Get really used to going through your chart of accounts. This is the way to get not confused, and you should be looking at your registers all the time. Okay. So we're going to go look at our mortgage. And it says 452. Pretty sure that's at 481. The reason is all of that interest of 29,000 is not booked. Now I'm going to show you how to post it the way I would post it, because unless you're like trying to do down and dirty bookkeeping and you have a whole year to post, so then just post the one entry. But something seems to always go wrong. And then again, you're trying to figure it out and it takes hours. That it's better to post these each month. So I'm going to show you how you do that. So now we're in the mortgage. So think about it. We need to post the interest, which is going to decrease. I mean, it's going to increase our loan back up, right? Because these decreases are too much. So once we post the interest, our loan balance is going back up. So our first one is February. I do it like the day after, so that I can see the true, I don't want that to show up in my loan register. Just do it the day after. So this is February 24 interest. And let me just show it to you here. You know, guys, you can do this thing too. You can just like copy stuff from one screen and it usually works. It's like, holy cow. Okay. Here's another reason you'd want a class. I'm just going to throw this in here now, but if you had multiple loans or multiple properties, you really need to class. Okay. Later you'll see what I mean. Okay, so now I'm going to do one more. 3/2/24. I don't even. So now we go to March. Now it went down a little bit. But notice how on my interest expense, I didn't go and make one for like that said 50 Railroad. That is like the worst thing you can do. You're going to have a chart of account, a profit and loss you cannot read. If you're putting more than one entity or building because you have two buildings inside one LLC, you're just gonna have to pay the money, I think, and upgrade with the classes, because you're gonna spend so much time trying to save the money of the different subscription price. The end, you're gonna be making so many Excel sheets to try and figure out the profitability of the property. And if you would just, just bite the bullet. Okay, so I'm gonna pause this and enter the rest. Okay, guys, so now this is the most simplistic of mortgages. I will do another one that shows escrow, but here we go. So we show all our 12 payments, or 11 payments actually. And this is what I want you getting used to. You should go in and look in your registers. That's how you're going to find your mistakes. So I have my 11 payments because I started in February, and then I have my interest. Okay, and then of course, and this happens on real loans too, is that there's like a little bit of rounding. So even though I posted my interest perfect per this schedule, it says 481, 381.97. I'm off like 4 cents. See, there's 4 cents that I need to end at. So what you would do is at the end, your end, because this would drive me crazy if it didn't exactly work. Oh, and I want to show you one other thing. So I added the class here, but and remember what I told you, these are creating journal entries. It's just easier for you. You do, if you enter it through here, need to go back and add the second line, because it's only doing one part. It's not classing out your interest expense. Okay, so now 481, 381.97. That matches what we're supposed to have at year end. And I would reconcile these either once a month or just make sure everything works. And then I like to reconcile the loan once a year at least. Let me show you how you do that. Because if you reconcile your loans, then you know you got it right. And then when you get that 1098 interest statement from the bank, it usually has your beginning principal balance, and then it has how much interest you paid and where you should end up. And I've never really, other than pennies, I've never seen one that wasn't correct. Right, incorrect. Okay, so 481, 381.97, 12/31/24. Start reconciling. It's going to do this a lot when you start a brand new file with those pop-ups. And look, we match. It's a 0. So our ending balance matches. So we'd say finish. So you should reconcile your loans every year. This way, your accountant is not going to your accountant's not there to audit you. If you don't give them good numbers, which I've seen books that were really bad and no one reconciled things, bad numbers in the books turns into a bad tax return. So, and your accountant is way too busy to be doing book work. They're not going to catch all your mistakes. So just don't go into it thinking, oh, I'll give my accountant all of my tax things and my QuickBooks and they can just fix it. They're not gonna. Okay. Then let me just refresh this. The other thing is I have a bunch of tabs open, and all you do is copy and paste them into other tabs of your Chrome browser, and then you can do different things. But if you're doing and changing stuff in one tab, when you go to another tab, you need to click refresh or re-click run. Oh, shoot, now I'm out. Again, this has to do with this rounding, and now our interest is out like 3 cents. I had to do that though to get my mortgage to work. So at that point, I'm okay. As long as my ending balance works and no IRS is going to care about 2 cents, 3 cents, then you just adjust to whatever the real, when the 1098 comes. Okay. Like, no, don't worry. We're worried when it's out like hundreds or thousands of dollars. When it's out cents, just adjust. Okay. All right. So that is a loan. I'm going to do a quick little bonus thing and explain if then all of a sudden you had to pay escrow. So let's go into 2025. So let's say instead of this being 4,355, they said, you know what? We want to pay the taxes for you. We're going to make your payment 4,555. And we're 200 is going to be escrow. So what does that do? First of all, if you do have an escrow account, you need to make one in your QuickBooks. It is essentially, the escrow account is another bank account of yours that the bank controls. So it's your money. You even make interest, tiny little bit of interest income in it, but you don't have any control over it, but it's yours. And your $200 every month or $2,400 for the year, that's all your money because they're going to use that money to pay your property tax. So we'll say escrow 50 railroad. Okay, so let's say this starts January 1st, 2025. So now, once again, we make our whole payment to the loan. That never changes. But instead, I'm going to make this payment for 555.54, okay? And I'm only going to do one entry. So what happens when we go to our loan? Oh, loan, where are you? Okay. All right. So now we're going to do the same thing we did before. We're going to post our interest. Oops. And so for January, I didn't print that out. January 2025, our interest, the escrow and the interest have nothing to do with each other. Okay. So since I'm using classing though, I got to go back, pop the expense. So I don't have to do it later. Okay. But so I've posted my interest. Now I need to post my escrow. Because again, I've got too much money. Our payment was even more than normal, right? It's 200 more. So that's bringing the loan down even faster with an extra $200. You don't really need to class this balance sheet. We're going to decrease. No, wait, sorry. We're going to increase, throwing the loan back up because that money's not going to principal. Where's my escrow bank account? Oh, you know what? Because I think I did it. I think because again, I said, if you have things in different tabs, and you don't like refresh it, it doesn't know I made escrow bank account. Okay, so I entered my interest. Throwing the loan back up because that money wasn't for the principal. The nice thing is now, guys, you can like tab in this software. Back in the day with QuickBooks Desktop, I loved it. You just like tab, pop, you know, just like key away. And online was always way too slow. Okay, so $200 has now gone to our escrow bank account. So see how I'm in these registers? I could just jump around in these registers like all day long. Super exciting. All right, $200. Let's just make some like fictitious payment that's under $200. So we're gonna go, and then the bank is paying it for you. Let's say they have to pay the only thing they ever pay is insurance and taxes. Literally, that's it. Insurance that I know. Correct me if I'm wrong. Okay, so like let's say 131.25. And some of the bank's escrow statements are horrible. Like the good ones are fine. It's sometimes the bad ones. Okay, travelers, insurance. Okay, I'm just doing that on the fly. We would put this to 50 railroad. Let's say it was $150. Maybe it's every month, right? You have, who knows what they're doing. Property insurance. So every month that $200 gets reallocated, right? So let me just write out what we've talked about. Process. Okay, so I just want to go over like the key things you want to remember. You post the entire mortgage payment to your loan register. So if it's 2,600, all 2,600 hits that loan. Then what you do, so it's like these little bullets. Make an increasing entry via journal entry in the loan register to account for the interest expense. If you have escrow, you're going to make an increasing entry via journal entry in the loan register to account for the escrow money. There's next step on the escrow. You need a second entry to move that $200 out of the loan register and into the escrow. I already know what you're going to say. I already know you're going to say, why don't we just split the check, right? Like, why don't we just go in here and instead break out escrow here? Oops. You could, but I don't recommend it because everybody screws this stuff up and then it's so hard to find which one you mucked up. I have spent more of my life fixing bad books that I would not recommend this, but you could. So if you did it that way, then you'd have to go get your journal out of the other piece, because now you got two 200s. So one was through the expense, so you'd have to delete that. So you could do that, but what happens is, this is what happens. You or someone you hire goes about trying to post this, and then they stop paying attention all of a sudden, and they put this 2,600 up in April's, and they pull something over here, they do that. So then you have to literally go through every entry 10 times to figure out where it went wrong. But if you just posted it this way, the full payment amount, then you're going to see 11 payments. And then it makes it so easy to find out, especially when you have if you have like more than one loan on a set of books at the same bank with very similar amounts, it's going to be even worse. I have one client who is not in real estate, but they have like 10 trucks and they bought all 10 in the same year on the same day, and they have the exact same loan. Do you know what a mess that is to try and figure out how to allocate all those payments? So that's why it's better to post the full amount, then back out your interest, back out your escrow. If you can remember, like if you're looking at something like this and the escrow is different, I personally like to put the whole amount to the loan, and then it's easy to tweak it. Okay, that's my rant about mortgages. The other thing I will just briefly show, because I threw a class on that, and I just think everybody should really consider like how much money you're not really saving by going with the cheaper version and not getting classes. Now, you don't need classes if you only have one property. But if you're running more than one property and you need to know it, you need to know like the profitability of the different units and so forth, you're going to waste so much time trying to figure that out, or you're going to muck up that P&L so it's 10 pages. Why does it not like? Okay. So I did an all date, so this was plus whatever. But so look, I'm able to delineate any expenses I put to 50 Railroad, and it kept everything else out of this file. So that's a class for 50 Railroad. But if I ran it for everything, see how there's so many other things in here? That's what's nice about the class. It would make it by column. So you'll see how much everything costs. All right, guys, please put in the comments below any video requests. And I also give private lessons to real estate investors. All right, have a great day.